Hello, guys, and welcome back for the wrap up for the end of January 2020. If you're new here, there's a bunch of new subscribers. Again, welcome aboard. Thank you. Basically, what this particular series is we use Trade Ideas Backtester to backtest a couple of scenarios and theories that we've got about the market. We use that backtest to come up with a list. I scan those lists using my technical analysis eye, and it just, in my experience as a trader, we come up with 4 longs and 4 shorts that are interesting stocks for us. We enter in the orders to get into those using Trade Ideas Auto Trader, Brokerage Plus, and basically say enter if these certain things occur, right? So enter if it doesn't trigger in the first 5 minutes of the day, or there's no extreme gap, or the market's not doing anything crazy and blah, blah. So then what we do is we hold those all week, and then we close them on Friday and we repeat again. So we're basically creating like these mini portfolios every week. And then from there we go and close them out, go into the weekend flat, and then repeat it, right? So we did this all last year. The performance was amazing, but I didn't do a good job tracking it. This particular time I am tracking them, so I'm going to keep you guys updated, and we'll show you that in a second. Speaking of trade ideas, right, again, every video you see on the channel, whether it's the live day trading, the live swing trading, it's all kind of done with this particular software, and it's just because it has a back tester and a scanner and an auto trader all in one. So I can come up with theories, I can test those theories, and then I can have the system trade those theories for me, all kind of hands off in nature. So they are having a 2-week test drive. So basically it gives you access to the premium product, their high-end product. You can play with it for 2 weeks, starts on February 3rd, goes to the 12th. So again, if you're interested, links for that or the full version with the discount link is in the channel below. Again, full disclosure, that is an affiliate link, so I get a little kickback to that. Again, I don't want to hide anything from anyone there. So let's take a look at the performance first, and then let's take a look at the SPY. So the SPY is insane, so I'm actually glad I only got triggered in 2. This is our first losing week of the year, with CSX kind of triggered and pulled back a bit, and MCY, which we're actually going to add back to the list this week, which is rare for us, did about the same, right? So it was a little bit of a gain on MCY and a little bit of a loss on CSX, but I'm actually just going to move this up here now. So we'll go into my untriggered column there. So for the week, when I closed it out, it was a loss of 50 cents. So just a little walk through this spreadsheet. This is how much you would have made or lost with 100 shares, 200 shares, 300 shares, 400, 500. You can see just a chart of the performance kind of year to date, and I'll just keep this going as things go. So quickly, looking at the market to start with, you can see this kind of big long trend line that's been holding as support the whole time. We broke that from, delete this, we broke that from the downside. We came back up and tested, and then we pulled back lower. What's interesting today is it essentially engulfed most of this bounce action here. So last time we had a bit of a sell-off was right here, and this was an abandoned baby, which is a very bullish signal. And the same kind of thing happened here, where you kind of classify this as an island gap, which is a bullish signal as well. This one yet to do anything like that, so this one is now kind of guilty until proven innocent. I'll be more interested in the short over the long side of this. So next, it's interesting to note that the QQQs look a little bit better. What's interesting here is there's a big engulfing candle, and that's because I believe it was Amazon that had earnings. Yeah, you can see it opened up and then just kind of sold off dramatically here. So what I'm doing is kind of the same thing that I always do, where I am going to build this balanced portfolio, but you'll see that I'm kind of looking for different things on the long side than the short side. So let's go over that now, and then we'll go over Bitcoin at the end, and that will be it for this video. So first, we're going to look at the long side. MCY was on last week because it had this kind of long base that was happening here. Not too big of a short float at all, but basically looked like it was going to pop out of this base. We had a resistance line here. It did, and then it kind of came right back in, but actually held pretty strong. So again, remember the SPY was really, really down on the week, and this actually held up pretty well. That's a pretty bullish sign for these things. So I've got an eye kind of above this area to see if we can continue into the gap here. Again, we don't really have much resistance in our way here at all. I'm going to show you guys a cool new tool that's built in just a second here, but APPN. So essentially with APPN, what we're looking at is just a bull flag, right? So we had a big, strong push up, a little pull down here. But again, if you look at the last week's candles, you can see that even as the SPY was selling, this one was holding up pretty well. So I've got interesting thing that I think if I push up here, that it will continue to maybe retest highs. And again, we know where we're wrong fairly simply. PTON. So this is where I'm going to stop for a second and show you guys this cool tool that Trade Ideas is putting out. But essentially what we're looking at this one again is same relative strength, right? That's kind of the theme that you're noticing here, where on the week when we had a big bearish week in the market, this one didn't participate. So we have this ascending triangle that's happening here, and to this new tool. If you don't know about anchored VWAP, I'm going to redirect you to look up Brian Shannon from Alpha Trends. This is kind of his baby or his invention, and we've just added it into the system. So I'm just going to circle areas where this purple line has been very significant for this stock. So if you don't know about VWAP, I have a video on the channel about it, but essentially it's just taking the average price of every participant. So it's taking volume and multiplying it by price and averaging those two out to say this is where the average person is on this stock. So what Brian Shannon does, and what I've been playing around with this new tool doing myself, is you anchor it from interesting points. So this Peloton, basically I'm anchoring it from the beginning. So if you take the average price of every single trade that has taken place on this stock from its inception, it's right here. So this is an area that would be defended quite heavily by large institutions, large traders, hedge funds, this type of thing. But I just wanted to show you how well this stock really respects this level and how well we've noticed that that's happened quite a bit. If I go here on the SPY, and then I actually anchor a VWAP from the high, we were looking at this as it was happening. It's kind of hard to see. I'll zoom in a little bit. But it actually denotes pretty much perfectly with the high of this area here. So the market sold off, it came back, and then the average price of everybody who participated in the market from the highs here acted as resistance before us coiling over. So it's a really interesting little indicator that just kind of gives you a good idea about where, on average, the market is. So last year on the long side is DLTR. So DLTR, we're looking at this RSI divergence, something that I've been following more and more, where it just shows kind of a lack of momentum on this big down move. Again, remember on the Qs and on the SPY, we've had a really big down day and a really big down week, where this actually ended up a little bit up on the week. Along with that, held up really nicely with this kind of bottoming tail that happened through here. So again, for the long side, looking for relative strength. And for the short side, I'm looking for things that look like they can still roll over. It was really easy to find stocks that were already down for momentum continuation to the downside, but I just never have luck with that on the short side of the market. So what we have in ACLS is essentially this big strong push up, and then we've gapped under this little base here, and then we've been fighting back and forth to get above it, and it looks like it's failing. So I think it's potential that we can sell off here fast. Same type of deal. We're trying to hold this area here, And if we do an anchored VWAP from after the gap and we say, okay, everybody who participated after the gap, all of this price action here, if you look at just the price action, you say, okay, well, it's around here. But we know that the average price of the average market participant since this gap up is above us, right? So that leads a little bit of a credence to we have a potential of going down before we push higher. VAR just kind of gapped out of this really strong push up here and gapped under this area of support, tried to rally up to it and then failed. So I've got my eyes on this as kind of a continuation short here if there's some profit taking that wants to take place. And last but not least, XPO. Same type of deal, right? So this is an island reversal right here, if anyone's wondering what that pattern looks like, where something gaps up, chops around in a really tight range, and then gaps under it, right? So this is your island here. Very bullish signal when it happens on the bottom of a trend and very bearish signal when it happens at the top. So I'm basically just wondering if this particular island reversal is going to continue to the downside. A quick look at Bitcoin. So last week we were in this area here, right in here. So I had mentioned then that if we continued to kind of push higher here, I would enter back in long. So I did that, and I am currently long with a stop a little bit worse than break even. So most of my risk is already gone from the trade. Basically just this descending line had got broken. We came right up to it and we kissed it, and then we pulled back, and now we continued higher. I redrew this line, I think, since the last time I was talking to you guys. So, just a bull flag, looking for a trade on the bull flag and trying to see if there's any kind of continuation. So again, I'm in this position with a chunk taken out and then the rest at break even. So one last thing I wanted to note for the few of you that I know that stick around to the end of this is kind of just a word of warning and a dump of an experience. Like, I know if there's any new traders out there, you haven't traded through bear markets, and I don't want to be the one to say that this is the beginning of a bear market, because who knows, this virus thing could go over and then we're all-time highs again. But if it is, the main difference is you want to know, and even if it's something it's going to happen just like this, even if it's just like that or just like this, which is just a temporary move, is just to understand the main difference is volatility, right? The main difference for you guys as short-term traders isn't direction, right? Because you can short in through here, and you can short in through here, and you could have shorted in through here. But the main difference of this is the speed of the market. And just do that by very simply comparing candle size, right? Look at the size of the candles here versus the size of the candles, say, here. You can see that there's a lot more intraday movement and a lot more choppiness when this kind of bear market, I hate to say the term, but this fear comes into the market. And when you have these expanded ranges, you have faster profits and faster losses. So my recommendation in places like this is always to lower your position size and increase your stop loss and increase what you want as a profit target. And then maybe even decrease the time. So the reason I do that is because, a move that took a week to happen here can happen in a day here, right? So we engulfed a couple weeks of action in this last little down push. And that's just the way it will go in these higher volatility markets. So a lot of people won't change a thing. They'll keep trading the same size and they'll keep using the same stops, and they end up getting whipsawed and stopped out and chopped around a lot. So just take a step back and say, I want to keep my trading consistent across all markets. That's your job as a trader. The best way to do that is just to say, okay, I understand that things are going a bit wacky right now. Let me just take a step back. Let me widen my stops for my algos or for my discretionary trading or whatever it is, just to understand that I need a little bit of a wider stop. But to keep the same risk profile, to keep everything consistent, I need to lower the share size. And doing that simple thing alone allows you to kind of better navigate these markets. So again, that's just a tip with no real statistical backing, but just something I have seen throughout the years, and I hope it helped you guys out. So Next week, another swing trading video. This week got a little bit busy. I didn't have a chance to do it, but we will do that next week. And then another video like this. And I'm still editing the back to basics that I'm doing with my fiance, where we're doing the same thing we did, where I am teaching her how to trade from the ground up. So I think those are really good series and should be really interesting for you guys. So a lot of cool stuff coming, but again, just be safe out there, guys.